Hello everybody, Stuart here. I hope you can hear me loud and clear and the audio is okay. We had some real issues with it yesterday, so I've started on time. Thank you for that, Robert. Let's crack on. So today we're going to be talking about intraday trading strategy. I'm going to talk about the theory, and I'm going to show you on live charts what I do. Okay, there's lots of stuff you can add, there's lots of stuff you can take out, but I'll go through what the theory says, and then I'll go through what actually happens in real life, what I actually do on these 1 hour charts, intraday stuff when I'm posting stuff. The rules I follow. My rules are very simple. It's quite stripped down, and it's really to do with the price. And there's a few indicators on there, but price action itself, lots of people, if you take it all off, that some people trade simply on the price action itself. So we'll talk about that as well. Obviously, any questions, please put them in the question box, and I'm under strict instructions by lots of people here to slow down and speak more slowly. So I'll try and do that and try and get enthusiastic, but not speak too quickly. So I hope that helps everybody. So welcome everybody, wherever you are in the world. So let's crack on. So usual admin before we get going. The material here is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation, or indeed a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources. Any information containing the indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in Forex and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability or for any loss arising from any investment made based on the information provided in this communication. And finally, this communication must not be reproduced or further distributed without our prior written permission. Okay, that's the admin bit out of the way. This is me. I won't bore you with my background, but basically I've been doing this for quite a while. I've got 3 or 4 key mantras. I'm going to go through one a bit in a moment. Do it if it's probable. Do it. Keep it simple and look at multiple time frames. That's my very simple approach, regardless of whatever time frames you're trading on. However, the most important thing is to know yourself. And intraday trading, from scalping all the way up to waiting for the 4-hour candles to close, isn't for everybody. So you've got to really know yourself. Okay, it's right up some people's street. It's anathema to other people's personality. So it's all about knowing yourself, and that's what I'm going to touch on at the beginning. But I'm basically going to go through the theory, and then I'll explain my approach on the 1 hour time frame. It's very straightforward. You can add or take away additional indicators as you feel free, but obviously the issue with that is sometimes the more indicators you have on, the more complicated it gets. Completely trading just on the price with no indicators, some people feel uncomfortable with that, but we'll have a look at both of those as well. I'll strip some of the charts out, and we'll see that as well. Okay, because candle patterns are really good for that. So it's all about time frames, discipline, energy, and patience. So nothing changes. Trading, whatever time frames you're trading in, it's all about patience and discipline and having a system and sticking to your system and managing the risk. Always about managing the risk and the steps we can take. Obviously, the books are on there as well. So let's get going. So let me just go back a bit. Some basic rules for intraday traders. Are you designed? I said at the beginning, are you designed to be an intraday trader? Are you inherently a bull, always negative? Are you a bull, always positive? When markets are always going up, it's easy to you can buy stuff, but you find it very difficult to sell stuff. Or are you, the bear, always a doom monger, always looking negative? You want to be somewhere in between. You don't want to be a bear. You don't want to be a bull. You want to let the market dictate to you what you should do. You want to let the price or the indicators tell you what to do, whether you're on 5-minute time frames or 1 hour time frames. It's really you, but you really have to know yourself. So if you err to one side or the other, You got to bear that in mind. It doesn't mean that, excuse the pun, it doesn't mean that you can't trade. It just means you've got to know yourself. And I repeat this many, many times in all the seminars I do and all the webinars I do. It's always underlying everything we do, regardless of, the strategy or listening to experts or listening to robot or buying a robot or, some of the different guys from different brokers or watching stuff on YouTube. It's all about you, this business. So if, as I said, there you go. I've written all down there. So, how do you see yourself? This third slide here. Are you, the lone swimmer here down at the bottom, just ploughing his own course in the nice calm waters, or are you the jellyfish that floats in the ocean, getting washed and waved about with very little control, letting the markets and the waves and the currents drive you in the direction that the market wants you to go? You've got to, decide where you fit in here. Can you, here with the diving board, have you the ability to press that buy and sell button at these time frames? Can you jump in? Can you jump into the big ocean that is the trading floor? And is it deep enough? When you're out there, these are all ocean related. These are all water related. But you want some deep liquidity. You want some deep oceans to jump into, because that's a bit of security, and we'll come on to that in a minute as well. So it's all about knowing yourself and how do you see yourself and understanding it. You've got to understand yourself before you do any type of trading, whether it's intraday, end of day, or whatever time frame suits you or fits your particular lifestyle. Okay, so I'll say that many times, but let's get on with the strategy then. So first thing is to, if you're going to trade intraday, you really need to stick to the majors, I would argue. I look at about 12 or 10 or 12 different charts. The key ones up here on our website, so the 7 that we list up on the website, they're the ones with the tightest spread, okay? Euro, yen, the majors, the pound, Swiss, even the guppy can be a bit pricing here. The pound yen can be a bit price. So it's all about tight spreads, deep liquidity, and nice volatility. Because sometimes, as I say here, on intraday stuff, the spread can sometimes hurt you. If you're trading CAD Swiss on intraday, you've got to be aware of that spread. Look at the spread on if you're going to trade an index. Make sure the lot size and the spread isn't going to hurt you. And same with gold or silver, something like that. So highly liquid pairs tend to follow the laws of this idea of ranging and trending. That's what we're looking at. We're looking at ranging and trending. What's the market doing now? And that's really step 2. So the other key thing to be aware as well, if you're trading intraday, don't get sucked into too many correlated trades. So if you're along the euro dollar and you're also short dollar yen, you're in the same direction on both of those trades, aren't you? So don't get overexposed unless there's a really strong trend you identify and it all triggers, and that tends to what happened with trading. But just be aware of it, because it's always, always, always about risk and managing your risk. So try to stick to the majors. When I bring up my charts, you'll see I've got these plus another 5 or 6 on there as well. I'll tend to monitor intraday. As you can see, that the spread from pound yen's a good one, simply because it's so volatile, and you got some big targets and big obviously big stop losses intraday as well. But the spread can be quite key. Obviously, euro some really tight spreads on euro certainly on some of the accounts that we have. Excuse me. Let me just take a quick drink. So 2, or part of 1, it's not necessarily step 2, is beware, as I say, the liquidity. So here we've got 2 session changeovers and key news releases. Obviously, as an intraday trader, if the market can be suddenly moved in a certain direction by some of the big players before a key news item comes out. So be aware of that sort of thing as well. So liquidity, you need to know when the busiest section of the market is, when it's the market can be less or not necessarily less volatile, but when the big players are in, and it's really between the open of the London and the close of the London session here at 18. See how it drops off even at 1800 GMT. It's big close here at London 16:30 GMT here at the moment. This is GMT time at the moment. So that's the big deep liquidity London session, and when it overlaps with the New York morning session, that's the key time. So this is, if you're going to trade intraday, these are the hours you really want to be looking at to have a comfortable, no silly spikes or some spreads, obviously in the Asian session, those of you that are trading after work in the Asian session and trading New York or Sydney, Singapore, Hong Kong, obviously the liquidity is lower, but there's still a fairly amount. Obviously, it dies very significantly in the close of the US session, the liquidity. So be careful. Yes, this is GMT, Joel. Okay, so and at the moment, London time. The home of Forex. Remember, London is the Forex is centered through the London session, and that's currently the London is currently GMT at the moment because it's in its winter time. Okay, so there you go. That's quite. I can't remember when I got this from Bloomberg, but it was a while ago. But this is we can get these silly spikes when there's very low liquidity. It only needs one big bang to put a crazy order in or odd order in and can really spike it. You get very unlikely to get more spikes and spreads and slippages in the deep liquidity that is the London New York session. Also be aware of the changeover. So when London opens, we get this big spike up in volatility, and so this we'll look at this later as well. If you're trading with the ATR, which I do all the time, obviously the ATR overnight can be very low, and then all of a sudden it spikes up quite significantly during the London session. So that's obviously one to watch out. And as you can see, it dies quite aggressively as New York closes as well. So watch the session changeovers and watch the emphasis on the actual. Sometimes the currencies that can be traded. Sometimes the Aussie can be very liquid and moving around a lot. Obviously in the Asian session, but less so in the New York session. So watch those sort of things where you are in the world and the particular pair that you may be trading. And obviously the other key thing is to watch for key news in the day. So that can have a big impact. So today, 10:30, this is GMT as well. No, this is my times because it's come off my trading platform. So 10 o'clock this morning, 10 o'clock GMT, there was a announced gross domestic product for the euro. So that obviously will impact the euro if that's better than expected or worse than expected. So three key things: liquidity, the changeovers, and the news releases during the day. You've got to be aware of that. Nobody else is going to do it for you. You just got to plug that in and be aware. Sometimes the candles you're seeing may be getting moved around because of impending big news or just after big news. So again, just be aware of that and trade around it accordingly. Okay, so second step really is what's happening now. What are we doing? So we wake up, we switch on whatever time of the day you switch on your trading platform. What's going on? Markets do three things: they go up, they go down, they go sideways. So they trend or they range. It's a bit of a binary option, isn't it? Or binary outcome. You either win or you lose. That's it. Sometimes you finish flat. You can close things flat. So that's what again. So what is happening? What's going on in the market? And our traders tool is a great little platform to give you an idea. So this obviously here, trending is the red lines here. So we're going up. Green lines we're going sideways. So we go up, we go sideways, we go down, we go up. We go sideways, we go down. So ranging, if you're going to use oscillators within your trading platform, that's where you want to be looking at your oscillators when we're going sideways. We're topping and we're floor top here. But moving averages and trending indicators are great when you're moving. Or, as I said, as we see later, you take all the indicators off and just look purely at the price action and some sort of pivot points within the day to help you with that as well. And we'll look at that in a minute. So our traders tool platform, let me just bring that in for you, those of you that are not aware of it. Where's it gone? Just find it and I'll bring it in. So let's just bring that in and so you can all see that. So traders platform gives you a quick heads up of what's going on now. So actually, does anybody here, do you use the traders platform? Or is it of any use? Those of you that trade intraday, perhaps I should have asked this question before we got going. How many of you actually trade intraday that are here today? Yeah, a lot of you are intraday traders. Okay, so, and do you use the traders platform as well, Joel, Bruce? Yes. I'm learning, says Lucy. That's fair enough. Carlos, nope. Okay. All right. Well, it's here. What the traders platform is is a currency strength indicator in quite a simple form. Okay, what does that mean? Well, it's giving you the strength of the market feeling towards that particular currency. Remember, when you're trading currency, you're always trading a pair, so you're trading the difference between the currencies. You want a strong currency and a weak currency ideally, but here it's broken down. So this is live data from our servers based on the changes since midnight. So midnight is the start of the trading day, or 23:59:59, whatever you want to call it. So here gives you a quick graphical heads up of what's going on. So unsurprisingly, today we've got a very strong yen in the follow through from Mr. Cowell resigning yesterday. So we got risk coming into the market, so everybody's panicking. So when there's risk in the market, or people aren't feeling comfortable, they're taking risk risk off the market. We've got a strong yen and typically a strong Swiss. Okay, CAD's been weak all week, as we see, and it's remained weak today with the implications of the trade war from the US. Dollar's sort of up and down. It's up against the, so it's not really telling you anything. Euro's relatively strong. But the key one is the yen. So you want to look at a strong currency against a weak currency. So immediately here, you can see that yen is strong against all the main peers, the 7 other peers, and CAD's weak. So that if you then went to a dollar CAD trade, you'll see it in a very clear downtrend. It has been for days. Okay, so this is the sort of thing. Just to give you a quick heads up. It's not saying trade. I'm not saying trade dollar CAD, but this is suggesting that yen is strong, so you might want to look at the yen pairs given the information you've got here. Okay, so that's the beauty of Traders Board, and it's very simple. Okay, so you can see what's going on. So with that in mind, what is that particular pair doing? So we've got this idea about CAD yen. Well, it should be trending, so we might be wanting to be looking at moving averages if we've got a strong yen against a weak CAD, for instance, or a yen against some of the other currencies. So we'll come on to that. So what is going on now and what's about to happen during the day? You owe it to yourself. Write it down. Make sure you're aware of the times that the key news is coming out each day. So that's part 2. What's going on now? Part 3, or step 3, is to look at the big time scales. Okay. This is when you're setting up. Mine's already set up down to the 1 hour, but what you want to do if you are trading multiple times, this is the thing I'm talking about again, excuse me. So you want to sort of calibrate your chart. So you want to start of where the strong levels are. So you want to be putting on your daily and 4 hour support and resistance levels, because the smaller time frames, if they get to those levels during the day, they'll be key levels. So it's unlikely that a 1 hour time frame, if it gets to the daily resistance, is likely to burst through that. It may do, and maybe change it, because trends only last and ranges only last for so long. Every support and resistance level is there to be broken, and they don't last forever. And certain key things can suddenly change things. Like yesterday, or like last week, when Mr. President Trump announced the trade or the tariffs on steel and aluminium. Dollar CAD suddenly leapt up because the biggest immediate currency that was implicated by it was the Canadian dollar, because they're a big exporter of steel to the US. So it moved it to a different paradigm, a different time frame. So be aware of all those sort of things as well. And I'm just aware I'm talking too quickly again. So let me sit down and slow down. There we are. Slip down, slow down. So look at these higher time frames and then drill down to the time frame that you want to trade on. Okay, we'll go through this with some charts as well in a minute. So again, it's depending on the time frame that you want to trade and stick to it. Okay, so that's the key thing. So what are you trading? Are you waiting? You're going to sit there and watch the 15-minute candles for 2 hours, or are you going to sit there all day and just wait till the 1 hour candles finish 8 times during your trading day? It's all about you and deciding what fits your personality best. Decide on your trading time frame and stick to it. That's the key thing. Don't keep jumping around from one to the other, because you'll end up inevitably losing out. Okay, so then you position your trades and then zooming. And I use the ATR, and we'll come on to that in a minute, the average true range, as a stop loss, as a target. It's just a great comfort factor for me, and I'll explain that. But the issue with it, the lower the time frame, obviously the less significant it becomes, and that's why I stick to the 1 hour time frame, and even that can be a bit not great, but it works. It triggers for me, and I find that quite useful. Okay, so we were talking today. We were going to talk about sort of pure price action, but if you want to add oscillators, these are the standards that you use, and some of the one, and I'll show you again. I'll show you that my simplification of it. These are well proven approaches. Okay, so moving averages for trends, Bollinger Bands for volatility, and then oscillators for the ones where you're going sideways. Okay, my approach at the 1 hour doesn't really use the oscillators, but that's because I tend to be a trend trader. Okay, but if you want to, you want to take the option of when markets are going sideways to trade those barriers, those channels when it's bouncing from top to bottom. These oscillators are MACD and stochastics are quite useful for that. So my approach is the EMA, the moving average crossover. So it's the exponential 9 and 5 moving averages, and I use them as a crossover. So if the 5 crosses the 9 from below, it's going up, that's a possible long position. If it crosses from above going down, that's a short position. That's rule 1. Rule 2, again, we'll come on to the charts. It's easy to see the charts rather than just me reading all this stuff, is the midpoint of the Bollinger Band, which is the 20-period moving average. It's a simple moving average, but let's not get caught up on the issues that it's a different moving average. And my Bollinger Bands are set at 20, so we count 20, and the standard deviation is set to 2.5, and it gives me good entry points, and it's also, the Bollinger Bands gives you good support and resistance levels. So a cross of the midline together with a cross of the 9 and the 5, whether we're going up or down, because I'm a trend trader, gives me an entry. Okay, again, if I say optional, sometimes I'll use the MACD and the stochastics if we're looking for overbought and oversold position. So sometimes things have gone too far to the north or too far to the south, so we're overbought or oversold in the intraday because the market has overreacted to news, which it does all the time. It overreacts to news, and then it comes back to a sort of range area, or trend reversal as it's called, and back to its central sort of balance, equilibrium, and you'll see that in the candle patterns as well. Okay, so the key for my system at the 1 hour time frame is the 5 and the 9 EMA crossover, the Bollinger Bands, and a cross of the midline, and we'll build what we'll see how that fits in. Not on here also. I also have the 200 period moving average on all my charts as well, because that's a fundamental long-term a barrier, usually a big strong resistance or support level, and if that's broken and breached significantly, that's usually a strong indicator we're going in a different direction. So additionally to this is the 200 period moving average as well. Okay, so this what's right. I was gonna come on to that, and this is about risk, but we'll come on to that in a minute. Let's just bring in my intraday approach to trading, and we'll start with the ones with the oscillators on, and we'll take the oscillators off. So let's just, I don't know what's easier to see, the white chart or the black chart. You tell me. I've got two different things. Is it easier to see that one or the black one? What do you prefer, ladies and gentlemen? The black one, like that, or the white one? What's the preferred? First person was black. Nobody else has answered. Black. All right, everybody's saying black. Those of you that have answered. Okay, let's stick to this black background then. Right, so let's just go through my setup here. So here we are. This is my standard setup. So we'll bring up a chart in a minute, just the candles with no and I'll take all the indicators off altogether. So here we have, I've actually put the pivot points on here as well, which isn't normally on because we mentioned it in the slides, but it's not something I use to a great deal, to be honest. But anyway, it would help because sometimes night traders. Okay, Joe. So sometimes the more indicators you put on a chart can become more confusing for you. Okay, so something I haven't mentioned actually is the little arrows on here. These are the fractals as well. This is just a default setting, but it's not That's can be quite important, and it's again, I like those as well, so I should have mentioned those as well. So the arrows here, the arrowheads, are the fractals. So what have we got here? Let's just zoom out a bit. What's happening? Well, yes, we're up in a bit trend, aren't we? Since 50, this is telling us, as a quick eyeball, we've been this is Aussie dollar. We've been going up since 1500 yesterday, haven't we? Gone up. We hit a level there. We've sort of gone back. We're sort of we went overnight there and overnight there. So we sort of these two levels. So that's what we're looking at now. So what are the indicators telling us? Well, here on this chart, we've got the moving average. Let's start. We've got the Bollinger Bands, which is the green lines here. So the extremes of the Bollinger Bands. This is the deviations, and the midpoint is the 20 period. So that's what that's the key. We're looking for a break through that line if we're going to trend. Okay. But the first heads up is the crossing of the EMA. So the yellow line here on this one is the 5, and it's above the 9 here, and it's crossed at that point. So and the grey line is the 9. So one of the big issues with moving averages, one of the biggest criticisms they have, is that they are lagging, like lots and lots of indicators. Okay, but you just got to use it as a yardstick, if you like. So this one, on my rules, wouldn't have worked. We would have had a losing trade on this one if we'd taken this one, because the cross happened there, and then this candle completed closing under the 20 period, this green line here, and the key 200 period. Okay, so that would have been an entry. Things that may have put me off taking that trade, although it's filled the two key criteria, would have been that the 200 period is very, very flat. And also the 20 period is sort of flattening out. We've been up and it's sort of flattening out there. So that would have perhaps questioned me. However, my rules say on this 1 hour chart is that we enter the close of the candle, the close of the 1 hour candle. That would have been 77.84. So you'd have entered there on that one. And the target, I like the ATR. Now, why do I like the ATR? Because the ATR is what it says. It's the average true range. So it's the average true range that the price has done over the last 14 hours. It's set a default at 14. Okay. So at that point there, the ATR for Aussie dollar was about 19 pips on the 1 hour chart. So an entry at 77.84 should have taken us down to 70. If it hit out at 77.65, wouldn't it? Which would have been sort of down here, and that didn't work, did it? We missed out on that one. So 77.65 would have been entry. Target would have been round about there. So got close, but it didn't get all the way. So the other thing you might want to think about when you're trading these intraday is actually take the spread off sometimes. So if here on the 1 hour on the Aussie, so instead of taking the whole ATR, you want to take the, so it's only a one point spread. So if the ATR was, what do we say it was, 19, you might want to only take 18 pips or something. Got quite close, but then turned around. So where would the stop loss be on that? Well, I would have, my stop loss there would have been above the previous high. So again, one of the issues with this approach is sometimes the risk reward isn't great, as you can see there. Although it's not stopped out, it's been open all that time. So you may got it's not worked basically, and it's not worked because we've gone sideways. We haven't, this trend up didn't fulfill the trend down. Okay, and the key thing would have been the following candle. So if we've taken let's take all the indicators. Actually, let me just open right. Oops, what was I going to do? So pure price action traders, not a lot's happened for them because they would have been waiting they quite often trade off these candle patterns. Okay, so here let me just take all the indicators off object list. Leave those on. Object list is no, I didn't want object list. Indicator list. Come on, let's take all these indicators off. These moving average. So delete. You take let's actually leave the pivots on. Let's take that. Okay. Close. So all we've got in here now is the price. Set as candles, red, white's up, red's down, and we got pivot point. We've left the pivot points on as well. So price action is sometimes a sort of candle pattern related. So here, although my system said go short, and we haven't been stopped out yet, but we would have been stopped because we've gone sideways. What's the candle pattern? Well, the candle pattern has gone 2 big down ones, 2 big up ones, not happened, gone sideways. They've been engulfed by here, so we're still within this time frame here. But the key one was this big doji candle here, and that's saying we're not sure we're going to go south any further. So that would have been a heads up to get out of that. So that would have been perhaps to your stop loss there. You could have completely taken it out at the end of that, and then nothing's happened because we've gone sideways. We've got no indication up at these levels because again it's overnight. It's the Asian session, so there's not a great deal of indicators of what's going on for any move up. This one would suggest this is a sort of hanging man, suggesting we could we're going up. It didn't happen. We had a doji, another doji as the volume moves down, so the width of the candles becomes small. This one was suggesting perhaps a bit of weakness. Didn't happen. This was suggesting to the north. Didn't happen. We had a spike up. Didn't happen. So basically sideways. So trending's no good. That's when you might want to be looking for your oscillators. Price action traders, again, may have just literally seen this indecision after about at this point. So that's our top. That's our bottom overnight here. Hopefully you can see that. So next time, well, you would have sold it there. You might have been stopped out there, but you got a short there and taken it down to there. Bought at this bottom point and up to there, so that would have been fine. We're in that channel now. Hopefully everybody can see that. Okay, so that's pure, part of the pure price action is looking for key candle patterns, and some of them are very significant. So like when we got 3 in a row, let's just zoom into 3 white candle. No, we've only got 2 there, 3 there. Didn't really complete. Engulfing patterns, another strong one where we've got this floor forming here where this one hasn't got any further. We got this, we'd have had a fractal low there forming. We'd see that turning, and that would have been a heads up. But again, pure price action it would have been all the way up here before we got in, and so the energies continued through there upon that pure price action. Okay, so let's just get rid of that one or minimize it. That's the payout. So let's have a look at some examples. Again, my simple approach again. So let's have a look. Again, another one that didn't work this morning because I've taken that one off. There's one that's still open, and the gold is still open. This is one from, I don't know if you've seen the video this morning, but this is gold. Well, I'm actually long gold on the daily chart from last night, but this morning it triggered. It followed the rules, and we got short. Let's just zoom in a bit. So this line here is from last night. This is our entry here on the daily, but let's ignore that one. So we'd had a strong up run. We peaked out, or we topped out there. If you'd been trading that overnight, that's a near classic tweezer top there, where we've got the white candles we've been up, followed by a down candle, and the height has topped out. And again, look at the top. It's topped at that psychological number again. Psychological numbers come in all the time, so 1340. So a classic little short trade there. And the other thing, the key thing with candle patterns is they tend to run their course after 3 or 5, maximum of about 5 candles. So here would have been your short entry. And again, depending on how your target runs, but 1, 2, 3, 4, 5 candles would have taken you all the way back down to there. So that would have been a successful sort of short trade there on the tweezer top there at 1340, and we've run back down. Okay, so regardless of that, our entry on this one was here. We only saw this at 10 o'clock completion, the 10 o'clock candle. The actual cross of the moving averages happened here, but we hadn't crossed the midpoint of the Bollinger Band, the green line there. So next can, that was a heads up for me. That's suggesting that's weak, because we've got a big tall wick to the north, a very small body of the candle, which is suggesting indecision, and that we're going to go down. So nice, strong candle there for weakness. Next hour, we tried to spike up, but we couldn't really close. We couldn't close above the 9 and the 5 moving average, although we did close above the 20. So my entry was taken there when I saw that. So the cross had happened there. We'd closed significantly below the 20 period, so that was a nice heads up for me. And we're still short this one to 13. I think it's 113. 1330. So it's 1, 2, 3. Yeah, it's 2 or 3 hours into this, but it's gold, and it's interestingly the target was below the pivot point. So the pivot point's been hit twice the intraday. So that might be next time we get down, there might have been a better position for the or a safer position for the target there as we were above that. But I didn't have the pivot points on there when I took that. I can't get the installation of the indicators. I want them with explanation, please. I'm not sure what you mean by that, Gift. I can't get the installation of the indicators. Do you mean the these indicators on the chart? I tell you what, let's go back. I'm assuming you mean. Do you mean the indicators? So let's go back to this. So this is remember we stripped all these ones off the Aussie. So let's just do this for you. Okay. So what you do is insert indicators. Can you see that? So I'm looking for trending, so I'm going to put the Bollinger Bands on, and that's my standard Bollinger Band setting. Period 20, deviations 2.5. This is the standard setting, or the default setting, or the last setting it seems to be. It does on the goal. You're absolutely right. Yes. So, but anyway, it's very, it's all about the ATR for me. There's lots of other indicators you could put on there, and you could say, well, it's not going to get there, but it works enough. It works well enough for me for me to leave that. But yes, you're right. The pivot point, and that's the point of the pivot point. It is providing support. So, Gift, you talked about indicators. So there you go. That's the Bollinger Bands put back on. Insert indicators. Remember, we were looking for trends. So we want a moving average. We want the 200. Remember, I said I have the 200. So that's on a gold one. So that's the 200. So we do the same thing. Insert indicators, trend. Where's it gone? Where's the moving average gone? There he is. And we want the 5 and the 9. So we want the 5, which is blue. Okay. And that's the wrong blue, isn't it? And insert indicators. Okay. I'm sure I'm not going to do them all. I'm sure you get the idea. I'm not quite sure what your problem is. Gift, if you've got a problem, email me afterwards, okay, at webinars@Forex, and I'll try and help you out. Okay, so let's just put the 9 on as well. 9 was yellow, isn't it? Bright yellow. There you go. Okay, so that's the 9 and the 5 crossing, and then we're under the 9. That's a bit messy that now, isn't it? And that's the issue. You see, if you put too many indicators on there, you end up getting contrary indications. Okay, and that's why I say some people like to trade it stripped down completely, just looking at the candle patterns or just looking at the price action. I like a little bit of indication, a little bit of indicators on my charts. Okay, and they work well enough for me. Okay, so that's also, let me just knock that down as well. So that was that's a gold one that's still in play. One from earlier that I took that didn't work out, and the reason it didn't work out was perhaps I jumped. Sorry, this is a white one. Hopefully this one isn't too glary, but let me just quickly run through this one. This was a trade I took on this candle here, where it had only just broken the 20 period, so I was probably a little bit too keen, and it wasn't significant enough, and understandably we were looking for it to go down. It didn't. Doji candle afterwards saying ooh, and I got spiked because my stop was just over here, just over the overnight high, and we were stopped out here, in fact, on this candle about an hour or so later, but it's obviously gone, continued up there, but again ran into the first resistance, but relatively positive because it's still over the 20 period. So again, the 20 period has proved your friend there. If you hadn't have jumped in like I did, thinking it had broken it, but it hadn't broken it significant enough, just like here, only just popped through it and turned away. Broke it significantly. It went down for another hour. That would have worked if you'd been trading that one, waiting for that break there, cross there. That would have taken you down. But the support, the 200. So euro dollar here very clearly in a nice strong uptrend, and we'd taken I think 96 pips out of this up on the daily time frame from the webinar. Those of you at the webinar on Tuesday, hopefully you saw that one as well. Okay, so that's the euro dollar there, and that's all you do. You know, look at the ones. Obviously, some of these I've got on here are you know, the spread might be a wee bit too much, but look, there's another one that triggered earlier. The oil trade looked like it was. Let me zoom that one up. This isn't a position I've taken, but this just filled the rules. The cross, we can't actually see that very well, can we? The cross of the moving average was back up here, so we're in a nice downtrend. That was looked like a big down candle. Could have taken your entry, but again, the next hour was saying, well, no, it hasn't happened. It didn't break below the fractal low either. That's an interesting one as well. So I do have the fractals on here, and for me, fractals at the 1 hour time frame is the lowest time frame you want to be looking to put the fractals on. Okay, so that one didn't work. It would have taken you out, stopped you out. So, but it's still weak. Oil, because it's below its 200 period, it's 20 periods in the lower half of the Bollinger Band. Remember today, oil, Wednesday is a big day for oil. It's the inventories later on, so the players could be just moving this down with knowing have some heads up on what the oil, or there might have been some news here, some comments about oil, because there's lots of comments floating around all the time about oil. The Saudi princes in the UK at the moment. Aramco is a big IPO that's going on. So all sorts of things about oil. Very, very political commodity as well. So that simple crossing average, well, as you can see, it didn't work there simply because the moving average had crossed way up here. So we'd already ran down there. So that was a false entry there on that one. So that's all you do. It's as simple as that. So, but you want some energy, you want some big candle patterns and key movements. Let's zoom that in a bit. So that's all you do, and this a little approach works. You know, it works on the different time frames as well. So let's do the same thing, but down at say the 15-minute time frame. Obviously, everything's tighter and shorter. Your stop losses are lower, your targets are lower, but it's all about the time frame that you want to trade. So much more volatility here. So what's happened here? Well, that one would have failed. That one looked quite positive here on the 15. Let's bring that one. Sorry. This is pound. Excuse me. This is pound cable. This is I don't know. It's just the one I've picked. It's not for no particular reason. So again, here we're in a strong downtrend. It crossed there. We're under the 2. That would have been a nice winning trade. The resistance would have been, that's a pivot point, daily pivot point. So that was interest for us, but obviously the intraday stuff has more volatility around the pivot point. So held a wee bit, but we were determined. It was determined to go lower, wasn't it? And it smashed through the 200p. So that would have been a bit of a heads up. That was quite significant, but it wouldn't go lower again. So the close of that kind of say, then we closed above it. Wait. The cross appeared there. Were we going to stop into the pivot? You could have entered there. That would have given you a nice target there, and you would have hit your target there on this 15-minute one. Back under the pivot again. We've crossed here. Are we going to go lower? Well, there's a strong resistance there, so I would have probably been in two minds to actually take that one because it was the proximity of the 200 period. But we have broken it, and we possibly could have taken that. So, but that's suggesting more strength. But perhaps we're going to retest this low here on that one at 38.25. So we've broken this time frame. So, but as I say, this is 15 minutes. But as I say, what's the higher time frame telling us? Well, we're sort of going sideways, aren't we? Drifting down to the south on the 1 hour. What's the 4 hour telling us? Even higher. Well, we topped up here, and yes, we've been down all day. 1, 2, 3, 4 from this morning. The 4 hour candles going down, and they're suggesting more weakness, aren't they? Because they're under the 20. It's under those two key 9 and 5 moving averages. They haven't crossed yet, but that's suggesting up on the 4 hour time frame more weakness, but obviously it needs to, if you're following the rules, it will need to break 138, 35, 36 on the 4-hour time frame to go south. So that could be a target perhaps up on the 1-hour time frame. So 15-minute, yes, that's 1 hour short and the 4 hour short. So we're looking to go perhaps shorts, but on this one as well. But obviously this one's already spiked below that. So that's simply all you do, but stick to what works for you. If you can't watch the 15-minute candles and you can come in every hour to have a check of things, stick to that. If you're working, you know, full time, or if you're a student, if you're retired, whatever it is, you don't want to sit and watch the candles, but you do want to trade intraday, you know, think about this 1 hour approach. Think about the 4 hour approach, because remember, 4 hours is only 6 times in every 24 hours. It may not be enough action for you, but here you can get some strong trends, you can get some strong targets, and obviously, but your stop losses need to be better. So here, following the same rules here, bit of there, that would have been your entry there, because we'd crossed here at 4 o'clock. If you'd been up there early morning on the 5th, you'd have gone long there, and you could have either just added to that trade as it kept going until it crossed back under the blue or black under the yellow up there. You could have taken it. The ATR at that point is, let's just do that one. So that would have been your entry, 138.15. The ATR on the 4 hour is, you know, 40 pips. So 40 pips from there at 38.14 is 50 something, isn't it? So 50, what's that? Hang on, doing maths live. So 138.15 plus 40 is 55, or 55 would have been here. So we'd have got there within the next, within the next 2 candles. So we'd have been taken out there, and you know, that would have been first target. Where would have been second target? Well, for me, if I was trading, that would have been clearly the 200 period strong resistance. So that would have been target. Target 1 would have been my ATR, and target 2, the 200 period, because we're in a strong trend. We're above the 20 period. The lower time moving average is starting to align, and nice strongly once we'd got to target 1, that would give you confidence to get to target 2, because they're nicely aligned there. 29.5, we're pointing up, and up we go, and there you go. So again, it's just all depending on when you want to trade. Carlos, sorry I've confused you. Let's have a look. I'm a little confused. Your entry checklist is just the MA crossing 9 and 5, and the cross of the 20 period is more strong. Yeah, no, they're the 2 things. Okay, I want the 9 and the 5 to cross, and then the 20 period, the midpoint of the Bollinger Band, to cross, just like this one has happened here, Carlos. Okay, so the cross, and it's all about patience. So don't jump in. So that one had crossed there. Hopefully you can see this, Carlos. So the 9 and the 5 have crossed there, and then we've closed above the 20, the green line there. That's why we've got that entry point there. They're the 2 key things. So when you see my posts on Facebook and on, let me check the time, on Facebook and on the website, when I talk about 1, 2, 3, 4, 5, 6, that's the 5. Let's just go through that again. That's the 5, the 2 steps. So step 1 is the cross of the EMAs. Step 2 is sometimes happen before, is the cross of the moving average. Step 3 is, well, what's my target? Well, that's when you go down to the ATR. That's step 3. The target would be 40 pips on here. Step 4 is the entry at the close of that candle, or step 3 is the entry at the close of that candle at 138.15. Step 4 is the target, which is the ATR 40 pips on this one. Step 5 is the target, which has been 138.55. And step 6, the most important one, remember, is the stop loss. So where would the stop loss be on here? Well, the rules say, my rules say, below the latest turn. So my stop loss technically should be all the way down here. Okay, so the issue would be, let me just show you that one. Let's put that target on there. What do we say? It was 138.50. 138. Well, that's as good as. So the stop loss technically on this one should be there. Okay, so the people say to me all the time, and quite understandably, well, the stop loss is bigger than the target. What's the point in taking that? Well, the reason, yes, that's the logic, but in the real world, if you can see, oh, there's my target 1, target 2. In the real world, when we've got a trend developing, that tends to what happened. The 10, because this is crossed, and because we're above the 20 period moving average. The law of averages, the probability again, says that's quite a good target to get to, the ATR, because it's happened, because it's the average of the last 14 hours, remember. So the likelihood of it actually making another amount, that 15 or 40 pips or whatever is here on the 4-hour chart, is quite high. So the probability is with me. The probability of it getting to the 200 period being resistance is quite strong. And that's exactly what happened in that hour when we hit target 1. It spiked just below the 200. So it came back down again, went sideways for a bit, and then it had another go, and it went through it, and now it's come back, but it hasn't gone back under it much. Last 4 hours, it decided, well, I think I'm going back down again now, and it's turned and moved back down again. So we got us here. You can see a clear sort of top there. Here on it can't get over this sort of 130, and that's, look at where that is. That's 139. So another big round psychological number. It can't get over 139. So in the 4 hours, so it's moved back down. So yes. So although the stop loss was there, and I would have left it, it could have easily have been there on this one. It's easy in hindsight, isn't it? Because that was the latest low, and you could have moved that one up as you'd moved into profit. I tend not to use a trailing stop loss, but many people do. But that is just an example. So I hope that answered your question, Carlos. Okay. So don't overcomplicate it, and stick to some rules, and accept the other key thing. Like I said right at the beginning, this business is a mind game. I say it all the time. Accept that you lose a lot. That's just what happens. And I've lost this. The thing in my journal for this Euro one this morning was the question was the break of the 20 period wasn't really significant enough, but I thought it was good enough, and I was wrong. I lost. Okay. Please just reset. Right. Sorry. Repeat step 5 and 6. Right. Let me just bring up everybody said the black was easy. Was it? Which it was pound, wasn't it? So Jim, I haven't got. Actually, let me write it on the. There's a way of inserting a writing tool, isn't there? Hang on a minute. Where's the writing tool? I can write actually on the chart. Oh, can't find it. Tell you what, let me write on the slides. Let me just go through that, Robert. Sorry, Bruce, for you. Okay. So let me just move on to the next slide. Let me find a blank slide. Oh, actually. Let me write. I'll write on here. Okay. So pen. So 1 is the 5. Oh dear, that's not great, is it? 5 and the 9 EMA. Why can't I write better than that? 2 is the midpoint of the Bollinger Band. So here, so it's the mid Bolly band. Oh dear me. 3 is the ATR to give me the ATR gives me my target. Okay, so that's step 3. I know you only asked for 5 and 6, Bruce, but anyway. Thank you, Joel. Indicators, hot forex. Thank you. There you go. Andrew's just appeared as well to suggest that's what the. Thank you, Joel. I should know that, shouldn't I? Hot forex free. There it is. There it is. Right. Oh, it didn't want to. Why doesn't it want to do that? Oh, I got. It's going. Why is it going gling gling gling? Doesn't want to work. No, I've got. It's because that's still open. There it is. So I just click OK. Joel, you're a star. Thank you. Andrew, you're a star as well. Not enough funds. Indeed. So D for draw. D, and then I can. No. It doesn't want to work. Yeah. Anyway, let me as we're trying to fix this, let me just talk through it. So step 1, the cross of the moving averages. Step 2, the cross of the midpoint of the Bollinger Band, the green line here. Step 3, where's the target? The target is the ATR at the particular time frame. So that's step 3, sorry, is the entry. Step 4 is the target, which is the midpoint of the Bollinger Band. 5 and 6 is what Bruce is asking about. So 5 is the target, which is the ATR. And at this point, it was 40 pips on this particular chart. So it's this point here. And the stop loss, point 6, is where the energy turned, where the market turned. Because remember, we're trading trends. That's what moving averages are. They're trend traders. So where did the trend trade? Where did the energy trade change? Well, it happened. It changed at this at this bottom bit. Where that line is there. Well done, Andrea's fixed it. So let me just write this. So I need to write D. So 1. Oops. T 1. No. Oh, it's not working for me today. It's like they say, don't work with animals and children, don't they? On live telly, it's like live webinars, and we're nearly out of time anyway. Not enough funds, Joe. That made me laugh. Bruce. So 5. Oh, it doesn't want to work. It looked all right. It looked great earlier. It's just not. Freehand drawing is just not freehand enough for me. I'm just not up to this, am I? Anyway, so I'll. There was a slide on yesterday's webinar. I will send you all those who want it. I'll send you the slide from yesterday's webinar where I talk about the 5 points of the setup. Okay, so 5. Let me just go back through again. 5 is the target, which is the ATR of the particular time frame, and 6 is a stop loss, and the stop loss has to be where the stop loss has to be. And here in this one, it's below the latest turn. But because we're in a moving average, that's okay. We could have put it there as well, which happened to be at S2, which is interesting, isn't it? So we could have put it there a bit more comfortably. But you then, because your stop loss is bigger than the target, and people say, "Oh, don't trade that. That's not. There's no point." Yes, there is in a trend, because the trend's gone with us in this particular case. You then make sure that the risk here is no more than 3% of your, absolutely no more than 3% of your account, ideally 1%. If you can't do 1%, either put some more funds in your account or reduce the lot size that you're trading. That's why we have 0.01 micro lots for small accounts. But make sure this level here, if it gets hit, is only ever maximum 3% of your account, ideally 1 or 2%. Okay, so I will practice my freehand drawing for next time. Okay, I hope that hasn't disappointed you all too much. But anyway, you can see my terrible freehand writing on here anyway. So thank you for your time today. If there's any questions, please put them in the box. But that's my approach. I'll leave you with this slide. Risk really is everything. And I talk about my 1% rule. I won't leave you with that slide at all. So let's move on. So book list, I talk about all the time, Reminiscences of Stock Operator and whoops, there we go. And Trading in the Zone. They're the 2 key books you all should have. Free PDFs they are now. Although it's written 94 years ago, it's still a great book about trading. Jack Schwager, another great writer of the markets, interviewed the world's best billionaire traders. They didn't start as billionaires, started with a few $1,000s, some of them. So Levon, I will certainly send you that, the 5 steps. Yep. Elder and Van Tharp, both good teachers for traders. Michael Lewis likes great books about trading. Nicholas Taleb's all about probability. Black Swan is probably his most famous book. Neil Ferguson, that was 2 interesting chapters. If you're new, Anna Cooling's book, Forex for Beginners, is a really good introduction to Forex. Really nicely well written book. She's got a website. She talks a lot about volume. Her and her husband David, very good website. They'll sell you EAs as well, and some very good currency pair indicators as well, currency strength indicators. So anyway, this living more. I haven't got time for all of this. So next week we've got scalping tomorrow. I'm sure you're all of it. Probably more detail, probably what I talked about today. Lower time frames with Otto. Obviously live analysis every Tuesday. Candlesticks with Andrea on the 14th, and charting with patterns, flags, triangles, all of the key patterns that tend to repeat themselves, high probability trading patterns with Andrew as well on the 21st. Common trading mistakes, that's one I'm looking forward to that. Excuse me, although I'm away. I'm back on the 27th, and then we talked about Heikinashi. Heikinashi is great as well. If you're a scalper, have a look at Heikinashi candles. Takes a lot of the noise away. Some serious useful trends there with Heikinashi candles, and then Fibonacci for the end of the month. If you're in Africa, we're coming down to Nigeria, Kenya, and South Africa. We got a really good session in Port Harcourt on the 17th of February. This Saturday, we're in Lagos. I'm not going to be there, but I will be there in Abuja on the 24th. But the team in Lagos are really good, Abiola and his team. So get along to Lagos on the 10th on Saturday. So click that for to register. Johannesburg on the 17th. I will be in Johannesburg on the 17th, so come and meet us live. We'd love to meet you. Fun and games, and win some great prizes at our seminars as well. And then after that, on the Monday, it's a first seminar in Kenya, and that's got lots and lots of people registered for that. Lots and lots of interest there. 1,000 people want to come along. Bruce is booked already for when you're in LA. Carlos, you're in LA. You shouldn't really be speaking to. Yes, in Spanish is the issue for Latin America, Carlos, and we're working on that as well. Some of my colleagues are there as we speak, so don't worry, we haven't forgotten about you. We're doing some webinars in Spanish, actually, Carlos, as well. We're starting to do that as well out of the Mexico Education Center, so watch that as well. So Kenya, say on the Monday the 19th in Nairobi. Really looking forward to that as well. So look forward to meeting you all and speaking to you all again next week. So tomorrow is it's scalping tomorrow, so join Otto for scalping. Download the app if you haven't got it, because it's great. And any questions, please email me at webinars@hotforex.com. Friend me, send me a friend request to Stuart, Hot Forex, Cowell on Facebook, because lots of stuff gets put up on Facebook these days. And obviously all our written analysis is up here on our analysis page, analysis@hotforex.com. Email here and Facebook there. So thanks for your time, everybody. Hope that was useful. Anything I didn't cover or something you didn't understand or I ended up speaking too quickly, which is what I tend to do, please ask. Please send me an email and I'll be here to help you, okay? Because if you're successful, we're successful. Okay, thanks for your time today. See you all again soon. Bye now.